All right, let's talk Ulta Beauty. They just dropped their latest earnings, and on the surface, everything looked pretty rosy. But then, the stock took a nosedive. So what gives? We're going to dig into exactly what happened.
And when I say nosedive, I mean it. The day after their earnings came out on March 12th, the stock just cratered, closing down a whopping 8.12%. Ouch.
So that's the big question, right? How does a company report what looks like a strong quarter and then get punished for it by the market? It feels like a paradox, and that's the puzzle we're here to piece together. Okay, so first things first, let's look at the actual report card for Q4. Because like I said, on paper, things looked pretty solid. Okay, check out these numbers. Revenue, almost $3.9 billion. That's up nearly 12% from last year, and it's a solid beat of what analysts were expecting. So check one for the good guys. Now GAAP EPS, that's your earnings per share, a little more of a mixed bag. It was pretty much in line, maybe a slight miss depending on who you ask, and comparable sales, a key metric, were up a respectable 5.8%. All in all, not bad, right?
And you can see where that strength came from. Their loyalty program is a machine. Almost 47 million members now. E-commerce was on fire, up in the mid-teens. A huge chunk of that, 60%, came through their app, where active users are up 15%. And one category in particular, fragrance, absolutely crushed it with double-digit growth. I mean, everything seems to be pointing in the right direction, right?
Well, that's where the story takes a turn. See, the market wasn't really looking at all that good news. Investors zoomed in on something else entirely. The real story, the reason for that 8% drop, wasn't about the top-line sales. It was all about the bottom line, profitability, and what the future holds. And here it is, red flag number one. Look at that squeeze on operating margin. It went from a healthy 14.8% last year all the way down to 12.2% this quarter. I mean, that is a serious, serious hit to their profitability.
So you're probably asking what happened. Well, in a word, spending. Their SG&A costs, that's selling, general, and administrative expenses, shot up by 23%. That's growing way, way faster than their revenue did. This big jump in costs came from a few places, making big strategic investments, paying out higher bonuses, and the costs of bringing their new acquisition, Space NK, into the fold.
And this is where you get this massive disconnect. It was like two different conversations were happening. On one side, you had Ulta's management on the earnings call, and they were, celebrating their wins. Hey, we're gaining market share. Our loyalty program is growing. But on the other side, you had Wall Street, the market, and they were laser focused on the negatives, those shrinking margins, the soaring costs, and a very cautious look ahead.
Which brings us to red flag number two, the guidance. This is what they told investors to expect for the year ahead. And while their sales forecast looked okay, the all-important earnings per share guidance, well, it came in a little light. It was just slightly below what Wall Street wanted to see. And for an investor, that's a huge signal. It basically says, hey, those profit problems we just saw, yeah, they're not going away just yet.
And this quote from Ethan Fowler over at Zacks really just nails the market's mindset here. He said, Ulta's leadership position is not in question, but it is not immune to valuation compression when growth moderates. Let's translate that. He's saying, look, nobody doubts Ulta's a leader in beauty, but when your growth starts to slow down, investors just aren't willing to pay as much for your stock, especially when your profits are getting squeezed.
Okay, so management sees the writing on the wall. What's their game plan to turn this ship around? It's all wrapped up in this new strategy they're calling Ulta Beauty Unleashed.
It really breaks down into three main things they want to do. First, just keep growing the core business that everyone knows and loves. Second, get those new projects, especially their international plans, to scale up and start contributing. And third, fix the stuff behind the scenes. Realign their foundation by making their supply chain more efficient and finding ways to cut costs. And they have some pretty cool initiatives to make that happen. They're leaning into AI to personalize the shopping experience. They've got an expanded partnership with TikTok Shop, which is huge for reaching a younger audience. Of course, there's the big international move with Space NK. And behind the scenes, they're overhauling their supply chain, all while keeping the stores exciting with massive, in-demand brand launches like Rare Beauty.
Now, we've mentioned Space NK a couple of times, so let's be clear on what it is. Think of it as a luxury beauty retailer with over 80 stores across the UK and Ireland. This acquisition is Ulta's big ticket to expanding internationally. But, and this is the important part, it's also a big reason why those costs we talked about have been going up. It's both the opportunity and the challenge all in one.
All right, so that's the story so far. You've got the good, the bad, and the plan. Now for our favorite part here at Talk Tickers, our analyst take. What's our call on Ulta from here?
We are calling this one a market perform.
So why market perform? Why not a buy or a sell? Well, honestly, it's because the stock is sitting on a knife's edge between big opportunities and some pretty serious risks. There are a few key things we're going to be watching like a hawk next quarter. First, and most importantly, can they get those margins under control? Second, will that big TikTok shop partnership actually bring in new shoppers, or is it just noise? We're also watching the consumer. Are people still spending on beauty if the economy gets shaky? And that guidance they gave, that 2.5 to 3.5% comp growth, is that a lowball number they can easily beat, or is it going to be a real stretch? And don't forget, they plan to buy back about $1 billion of their own stock, which could help prop up the price.
So at the end of the day, the entire debate around Ulta stock boils down to this one single question. Can all these big, expensive investments they're making start to grow profits again before Wall Street just runs out of patience? That is the tug of war that will define this stock for the next few quarters.
And of course, we always have to say it, this is not financial advice.